Imagine a computer that no single person owns, no government can shut down, and that runs unstoppable programs handling billions of dollars every day. That's not science fiction. It's Ethereum, and it's already reshaping money, art, and the internet itself. By the end of this video, you'll understand it better than 99% of people. So what exactly is Ethereum? Think of Bitcoin as digital gold, a way to store and send value. Ethereum is something bigger. It's a global, decentralized computer that anyone on Earth can use, and that no company controls. Instead of just moving money, Ethereum lets developers build applications that run exactly as programmed, with no possibility of fraud or downtime. Here's a simple analogy. If Bitcoin is a calculator that does one thing well, Ethereum is a smartphone, a platform where thousands of apps can be built. These apps are powered by smart contracts, which are like digital vending machines. You put in the right input and the contract automatically delivers the output, no middleman required. Ethereum was created to expand blockchain beyond simple payments into a foundation for finance, gaming, art, and identity. In 2026, it matters because it hosts most of the world's decentralized finance and digital collectibles. Its native currency is called Ether, or ETH, which you use to pay for actions on the network. Understanding Ethereum is understanding where the internet is heading. Ethereum's story begins with a teenager. In 2013, a 19-year-old programmer named Vitalik Buterin published a white paper. He loved Bitcoin but felt it was too limited. It could only handle payments. Vitalik envisioned a blockchain flexible enough to run any application. Alongside co-founders like Gavin Wood and Joseph Lubin, he launched Ethereum in July 2015. Early on, it faced a massive test. In 2016, a project called the DAO was hacked and millions in ETH were stolen. The community made a controversial decision to reverse it, splitting Ethereum into two chains. The version we use today survived and thrived. Over the years, Ethereum hit huge milestones. The 2020 DeFi boom turned it into the home of decentralized finance. Then came the merge in September 2022, a monumental upgrade that switched Ethereum from energy-hungry mining to proof-of-stake, slashing its energy use by over 99%. Since then, upgrades like Shanghai and Dencun have improved scalability and lowered fees. From a teenager's idea to a network securing hundreds of billions in value, Ethereum's evolution has been remarkable. Let's peek under the hood without getting lost. At its core, Ethereum is a giant shared ledger, a record of everything that happens, copied across thousands of computers worldwide called nodes. When you do something on Ethereum like sending ETH or using an app, that action becomes a transaction. Here's the step-by-step. First, you sign the transaction using your private key, proving it's really you. Next, it gets broadcast to the network. Then validators, people who've locked up ETH as a security deposit through staking, verify the transaction is legitimate. Once confirmed, it's bundled into a block and permanently added to the chain. Every node updates its copy, so everyone agrees on the truth. To prevent spam, each action costs a small fee called gas, paid in ETH. Think of gas like postage. The more complex your transaction, the more you pay. Smart contracts run automatically when their conditions are met, like a promise written in code that executes itself. This system means no bank, no server, and no single point of failure controls what happens. Why do millions of people and thousands of projects choose Ethereum? First, it's programmable. Unlike traditional finance where you need banks and lawyers, Ethereum lets you build self-executing agreements that work automatically. Second, it's decentralized and permissionless. Anyone, anywhere, with an internet connection can use it without asking permission or revealing their identity. Third, it's transparent. Every transaction is publicly verifiable, which builds trust without requiring you to trust any single company. Fourth, it has an enormous network effect. Ethereum has the largest developer community in crypto, meaning more tools, more apps, and more security. Compared to traditional systems, the advantages are real. You can send value globally in minutes, not days. You can earn interest through decentralized lending without a bank. You can truly own digital assets that no platform can delete. For everyday users, this means financial services available 24/7, no matter where you live or your credit history. And since the merge, Ethereum is remarkably energy efficient. Its combination of flexibility, security, and community makes it the foundation that most of Web3 is built upon today. Ethereum isn't just theory, it's powering real applications right now. The biggest is decentralized finance, or DeFi. Platforms like Aave and Uniswap let people lend, borrow, and trade billions of dollars without any bank. You can earn yield on your crypto or swap tokens instantly, all through smart contracts. Then there are NFTs, non-fungible tokens. Artists, musicians, and creators use Ethereum to sell digital art and prove authentic ownership. Major brands like Nike and Adidas have launched digital collectibles on the network. Stablecoins are another massive use case. Digital dollars like USDC live on Ethereum, moving billions daily for payments and remittances. Gaming and the metaverse use Ethereum for in-game assets players actually own. Businesses use it for supply chain tracking, and some countries explore it for digital identity and voting systems. Even traditional finance giants like BlackRock have launched tokenized funds on Ethereum. The real impact? People in countries with unstable currencies use stablecoins to protect their savings. Freelancers get paid across borders instantly. Ethereum is quietly becoming financial infrastructure for a global, internet-native economy. Now for the honest part, Ethereum isn't perfect, and you need to know the risks. First, price volatility. ETH can swing 20% or more in a single day. Never invest money you can't afford to lose. Second, technical risk. Smart contracts are only as good as their code. Bugs and hacks have cost users billions across DeFi platforms. Always research a project before trusting it with your money. Third, scalability. During busy periods, gas fees can spike, making small transactions expensive, though upgrades and Layer 2 networks are steadily fixing this. Fourth, regulatory uncertainty. Governments worldwide are still deciding how to treat crypto, and new rules could impact prices and access. For beginners, the most common mistakes are falling for scams, clicking phishing links, and losing their private keys. Because if you lose your keys, your funds are gone forever, with no customer support to call. There's also competition from other blockchains claiming to be faster or cheaper. The key takeaway: Ethereum offers huge opportunity, but it demands caution, education, and personal responsibility. Treat security as seriously as you treat the investment itself. Ready to dip your toes in? Here's a practical, safe roadmap. Step 1. Educate yourself first. Spend time reading the official Ethereum.org website and reputable sources before spending $1. Step 2. Choose a trusted exchange. Established platforms like Coinbase, Kraken, or Binance let you buy ETH with regular money. Look for exchanges with strong security records and good reputations in your country. Step 3. Start small. You don't need thousands. You can buy a fraction of an ETH for as little as $10. Treat your first purchase as a learning experience. Step 4. Get a wallet. For serious amounts, move your ETH off the exchange into a self-custody wallet like MetaMask, or better yet, a hardware wallet like Ledger for maximum safety. Step 5. Protect your keys. Write your recovery phrase on paper, store it offline, and never share it with anyone, ever. No legitimate company will ask for it. Finally, research before using any app or clicking any link. Scams are everywhere. Start slow, verify everything, and let your confidence grow with your knowledge. Patience beats hype every single time. So where is Ethereum heading? The roadmap is ambitious, and Vitalik Buterin has laid out clear phases with names like the Surge and the Verge. The main goal is scalability, making Ethereum capable of handling millions of transactions cheaply. This happens largely through Layer 2 networks like Arbitrum, Optimism, and Base, which process transactions off the main chain and settle them securely on Ethereum. Expect fees to keep dropping and speed to keep rising. Proto-Danksharding, introduced with the Denkin upgrade, is already making Layer 2s dramatically cheaper. Experts predict continued growth in tokenization, where real-world assets like stocks, bonds, and real estate move onto Ethereum. Institutional adoption is accelerating, with ETH exchange-traded funds now available to traditional investors. The challenges? Ethereum must fend off competing blockchains and navigate evolving global regulation. But its massive developer base and first-mover advantage give it staying power. In 5 years, Ethereum could either become invisible infrastructure powering everyday apps, or face disruption if it fails to scale fast enough. The most likely outcome? A leaner, faster, more accessible network quietly running a huge slice of the digital economy. So there you have it, Ethereum, from the basics all the way to its future. What crypto topic should we break down next? Drop your questions and suggestions in the comments below. And if this helped you understand Ethereum, hit that subscribe button and the bell for weekly crypto education from Aurelian Wealth. See you in the next one.